Well, Singapore-listed Frasers Property wants to take Frasers Hospitality Trust private in a deal worth $1.3 billion. The firm and its partners are offering 70 cents each for each share of the Real Estate Investment Trust, or REIT. Now, the trust owns and manages 14 serviced apartments and hotels in Asia, Australia and Europe. Among them is the Intercontinental Singapore in Bugis. Frasers says the REIT's smaller size and the hospitality sector's slow growth in its markets make it difficult for the REIT to remain listed. Their proposal comes amid a consolidation of Singapore-based REITs. Last month, shareholders voted to merge two Mapletree REITs, one of which owns VivoCity. In 2020, a merger formed CapitaLand Integrated Commercial Trust, which owns malls like Bugis Plus and Plaza Singapura. And for more, we're joined by Prof Sing Tien Foo, head of the Department of Real Estate at NUS Business School. He is also director of the Institute of Real Estate and Urban Studies at NUS. Well, Prof Sing, yet another consolidation of S-REITs here. Why privatization instead of mergers acquisitions?
Frasers Hospitality Trust, I think, have different options to divest asset. MMA is one of them. Privatization is another one. MMA, we look at it, given the small size, I think it may not be the best interest from the sponsor's perspective to go for this MMA because it's the likelihood that they were going to be acquired by bigger REITs of other competitor. I think privatization in this case makes sense. I think we also have to add value without causing dilution to the value of for the investor.
Well, Prof, how timely is this privatization? Given hospitality's recovery from the pandemic is still quite uncertain, quite patchy, and as recessionary pressures are looming.
For smaller REITs like Frasers Hospitality and other REITs, I think they face pressures, especially trying to grow their income, and at the same time they also face pressures on the cost side, the expense side. So I think both the top line and the bottom line, I think, put some pressures on some of the REIT, especially the hospitality. Given the uncertainty in the travel business, I think this is timely. A good time for this Frasers Hospitality Trust, I think, to take the trust private, where the developer and sponsor in this case are able to then add value to growing the size without subject to the constraint of capital structures or capital market in this case.
So is this trend poised to continue? What could we see up ahead?
We have seen about 7 MMA since 2018. I think if you look at the last few MMA, 4 out of 7 of them are actually what we call the friendly acquisition and mergers, where the sponsor of the same REITs actually merged similar REITs with a similar property. But in this case, I think for Frasers to Frasers Property, I think the Frasers Commercial Trust and Frasers Logistics Commercial Trust have already been consolidated. I think this Frasers Hospital, because of the nature of the business, it's difficult for them to actually carry out this MMA. So privatization is one way for them to continue to stay competitive in the business and also to grow their business in the private setting.
Yeah, and just to elaborate a little further, how will this privatization offer help improve Frasers' valuations in a challenging market?
I think the Frasers Hospitality Trust, if we look at the business and also the quality of the asset, I think they hold a very good quality asset and also distributed across different regions. I think it's actually go well with the sponsor core business as well. So by taking this trust private, I think give the sponsor more flexibility, both in terms of acquiring new asset and also to grow the business. And they can actually warehouse this property and wait for the recovery in the sector before they actually relook into this whole platform again.
Many thanks for speaking with us. That was Professor Sing Tien Foo. He is head of the Department of Real Estate at NUS Business School.